Welcome to the Anton Stetner podcast. Today we're talking about Washington State's property tax lie. What's going on there?
The Washington State property tax system is broken, and it's not just like high values. It's the math on how we calculate everything. And here's what we're seeing too, and what I'm hearing, because we sell a lot of real estate. And so we hear from sellers and home buyers, oh my goodness, what is going on with property taxes here in Washington State? And people who've lived in their home for a long period of time, and they paid almost nothing for it way back in the day, 40 grand, 100 grand, 200 grand. All of a sudden they've got $1 million home and they're having to pay thousands of dollars a month in property taxes. But what's crazy is because we don't have an income tax, we rely on sales tax and property taxes. The way the system is structured, you're also facing massive financial shortfalls. King County alone faces a $150 million budget shortfall despite these skyrocketing property values. So this is the kind of the Washington State paradox in regards to property taxes. And there's this silent squeeze that's going on.
So basically what you're saying is taxes are going to continue being raised and taxed on us, but at the same time, we don't have enough revenue, which means it's just going to make it worse. So can't do the tax cuts because we need more revenue.
Bingo.
And that's kind of the paradox.
The paradox, exactly, is this crazy thing where we're being attacked from both sides, where the system isn't fully working and functioning like it's supposed to, but property taxes are freaking expensive. And so your tax bill isn't rising because the government's greedy. It's because of this rigid system that's set there. And it says 1% increase in the annual growth limit or total revenue, aka levy. And what this does is this cap forces a war, that struggling war we were just talking about, on homeowners. And then property taxes, that's what we base the budgets on. And they're allowed to collect the rate is back solved. It's solved and reversed off of total assessed values, and then they can take 1% of that. So this cap, unfortunately, it's like starving essential services, but then getting more and more expensive for homeowners all at the same time. And the 1% cap is designed to limit the government's revenue growth. But in a booming market, that becomes pain. So in the omnibus bill that was passed, the tax increases, the state spending increased by more than 8%. So they're actually, like we've been talking about, our subscribers know this, our listeners know this, Washington State is outspending their revenue growth even in a booming market. But then this mechanism, this pain is pushing this pain right off to the homeowner. So if you think that rate cuts, okay, this is where it also gets crazy. Where are we at with the Federal Reserve right now and them like possibly cutting rates?
Oh, most likely they're going to lower them, and things are getting more hot. Well, not hot, colder, I guess you could say, because it's slowing down.
Bingo.
Or there's some like bad things on the radar.
Bingo. So all of that sounds great. Hey, the Federal Reserve's going to cut rates. Debt gets cheaper. What's that do to home prices in Washington State? Do they start appreciating slower or faster?
If rates go down?
If rates go down.
Potentially they could go up.
Bingo. So if homes start appreciating faster, what happens to everyone's tax bill?
It goes up.
It goes up even faster.
That sucks.
This sucks. Bingo. Okay, so this is why I wanted to come and deliver this message today, because we are most likely headed into 2026 where you are most likely going to get more increases in your tax bill, and even again in 2027. And so this is going to be, once again, that dramatic redistribution of wealth. And the real question is, are you going to be a winner or a loser in this proportional math game? So how do taxes work in Washington State?
Yeah, that's my question. Like, how do they determine how much they're going to charge us? Is it just straight percentage?
It's straight percentage, but the way they do it is so rigid and so weird. it has pluses and minuses. So I want to kind of go through how it works. So the mechanism, the formula is very simple for taxation here in Washington State. We've got a levy rate, which equals the allowed budget amount divided by the total tax base. And the allowed budget is the numerator. So that in our example, because of state law, is 1%. And the total denominator, that is the value of all real estate, commercial and residential, added together. So if home values dramatically shoot up, some rates may drop. Some. But then some people may pay their massive unfair share. So this famous 1% cap, it actually limits the district's levy growth or revenue growth on existing property and not your individual bill. So new construction improvements and voter approved excess levies sit on top of that 1%. So when they talk about the 1% cap in your specific city, county, there could be additional levies sitting on top of it that will bring that even higher. So 1% is at the state level, at the city and county level, there may be additional stuff like sound transit, paying for light rail, for example. And this appreciation problem is how people end up paying a disproportionate share of this tax burden. So I want to give you an example, and this has real numbers attached to it. If the value of your home out appreciates your neighbor's home, you will end up paying more in taxes. So King County as a whole.
Well, that makes sense. I mean, that doesn't sound like questionable at all because it's all based off of the value of the house, right?
Correct, but it becomes massively disproportionate.
Disproportionate. So like if you have a 1,200 square foot house versus a 3,000 square foot house, which doesn't happen often, but does sometimes. Yep. You're just saying this person is going to be paying more taxes than the other person.
Yes.
But now, typically, wouldn't you say the amount you can afford to pay would be proportional to the house value? But I can see where the problem is. But because everybody in that neighborhood typically would probably be in the same like wealth, like level.
Exactly.
So it's just one person that has a bigger house, and I can.
But let's go more macro.
Yeah.
Okay. So more macro is like if you look at King County as a whole, the average home in King County paid 5.54% more. Well, what happened to Bellevue, Redmond, Kirkland?
Skyrockets.
Yeah.
The values. Because
the values went up more there. So in those areas, on what we'd call the east side, we saw a 9.81% increase in their taxes. So you think about this. If you're in the most desirable area, location, with the fastest appreciating prices, you will pay more than your unfair share in taxes than the rest of the area. In this case, it's almost double. So is their home value necessarily double? Maybe, maybe not. But the reality is the way this is skewed, they start to pay a disproportionate share. You can flip it over. If you are that 1,200 square foot home and you're beat up and the neighborhood's all 2,200 square feet, your taxes may actually go down as theirs rise.
Why?
Because what happens is it's all proportionate. If the assessed value of this one is less or declining slightly, like you and I have talked about a home that we've driven by multiple times that you and I are both like, man, we should buy that home because it's kind of beat up. It needs some love. I guarantee if we went and pulled the tax assessed value for that home, it's been completely flat or maybe even trending slightly down. So their taxes overall are trending down. So
but they get the same benefits as everybody else.
But they get the same benefits. Now, I'm not saying this is good or bad. I'm trying to just explain the system and the problems with the system and how it's broken. And what I hate is how crazy our property taxes are getting. And towards the end of this, we're going to tell you how to fight property taxes and how to deal with the crazy property taxes. And none of it's perfect, okay? So don't shoot the messenger. I'm just delivering the news. The market lag is your hidden time bomb. What happens is the market appreciates in 2025 or in 2024. By the way, those numbers I was sharing were from 24 because 25 is not done yet. Then It stops its assessed value at the end of 2020, at the end of the year, so the end of 2025, beginning of 2026. You get your new assessment, generally speaking, sometime around June, and that's when the taxes start to go up. So if the market peaks and starts to fall, your tax bill could be based on stale data. So we don't believe prices are going to go down, but if they did start to go down, you'd still be paying higher taxes than normal based on how our system is put together. So we talked about how King County was 5.54. Guess what Snohomish County was?
Well, I'm looking at 6.26.
6.26. So specific cities had an overall increase of 4% approved by Snohomish counties over the biennium. So this increase applies to the levy, but not the individual tax determined by the shift. So I want to explain what I just said. That means some parts of Snohomish County could have a 10% increase in property taxes because of these special levies, these special assessments sitting on top of it.
Can you explain what this is? So let's take the 6% that Snohomish is charging. Is that on an annual basis? Is it on the sale? Like, can you explain that?
Well, it changes all the time. So it's based on the assessed value.
So that's what you're paying every year, 6% taxes on average in Snohomish County on your home.
No, there was a 6% increase in 2024.
So that means that's where the 10% comes from.
With levies on top of it for a total of almost 10% in certain circumstances.
So let's just say there's a $500,000 house.
Yes.
Okay. It's crazy. It's kind of low.
Yeah.
Right?
Yeah.
Okay, let's say
let's
million.
Say there's an $800,000
No, let's
house.
just say $1 million for easy math, right? In 2026, on $1 million priced home or valued home, are you paying 10% that next year?
You're going to pay a minimum of $10,000 in taxes and probably more like $12,000 to $13,000.
Yeah, but that's not 10% because 10% would be $100,000.
It was a 10% increase.
10% increase
over the previous year.
So 6.6 increase. Got it.
Yes.
Okay, got it. So that's good to clarify because I was like, what the heck?
No, because that'd be $100,000.
Yeah, that's what I'm saying. Okay. Okay, got it.
So understand though that this is like a value eroding factor. So there's all kinds of economic data. As property taxes increase and as they get more and more expensive because of high priced values, it actually starts to cap the appreciation of homes. But we're in the supply pinch because of Growth Management Act and red tape and zoning. So where does this hurt? What it ends up hurting is it ends up hurting the middle class and the first-time home buyer the absolute most.
What you're saying, though, is if we're taking it back to supply and demand, right?
Yep.
We have a crazy lack of supply.
Lack of supply.
That's why even if demand is less, it's still enough where it drives prices up. If we have more houses being built, more supply, then there's more options, even if demand goes up, even if interest rates go down. So you can't price your house as high as you wouldn't have been able to or want to. So then prices stay kind of a little more steady. So then taxes don't go up as high.
Well, except for the next major problem. So now let's flip this coin over. We talked about this before. Our listeners, subscribers, they've been hanging out with us. We know we've been talking about the problems in commercial real estate, specifically how the office sector is more beat up, but just commercial in general is beat up. Now, people are talking about the commercial tsunami and how there's, billions and maybe trillions of dollars in commercial debt that's going to become a problem. I don't think we're going to run through that as a massive problem because interest rates are dropping. That's going to start to save the commercial market, number one. But number two, when we're talking about property taxes in Washington state, we do know that commercial values have been affected, and specifically in the office space, where we've seen some property values drop 30%, somewhat even more. Well, remember, the numerator is 1%. The denominator is every piece of real estate they can tax. If commercial real estate has going down in value and its assessed value is dropping, who picks up all the additional taxes? Homeowners. So the 1%, it stays the same. And is Washington State going to charge the absolute maximum amount they can? Yes or yes?
Yeah.
Yeah. So as these commercial values have been affected, you're once again getting just a weird conundrum based on the way our system is set up, is that increase in tax needed, that tax revenue that they can charge, then gets charged to homeowners. So homeowners have been paying a slightly higher disproportionate share in 2023, 2024, and they will again in 2025. I should say for the tax assessed value, which shows up in 2026, the year after. Just wild. I mean, a quick recap of that is essentially residential homeowners are subsidizing the commercial real estate problem.
Yeah, because in downtown, when I look out that window of my hotel, I can't believe how many vacant floors, multiple floors. No, and it's been like that for years now. How does the building even stay up? Do they make enough money on the other floors?
No.
So they're losing money.
They have to be.
And it's not just one building.
Yeah.
Any direction on multiple different hotels, because we happen to stay downtown quite often, tons of vacancies.
Yeah. And so, I mean, just kind of looking forward, there is an opportunity hack here. And we call it the PTAR hack, the property tax assessment regressivity. This is a systematic issue where lower property values are assessed at a higher percentage of their true market values than higher property values. Okay, so this is kind of something interesting to pay attention to, and you may have to fight. So let's go back to that 1,200 square foot example. That 1,200 square foot example, let's just say that one is now in good condition. It's not, getting worse. That one may actually have a property assessed value that is right at the actual market value or slightly above. In other words, the lower end may end up paying their unfair share too, because the way our system is set up. Conversely, the higher value properties tend to be significantly lower than the actual sales price or market value, which essentially provides them a lower effective tax rate. Why? Because the assessor is not built to deal with upper end properties. The more vanilla ice cream it is, the easier it is for them to assess them. The easier it is for them to understand them. Second, because we're going to talk about how to fight this stuff. If you give someone an outrageous tax bill who is in an upper end home, a luxury home, they have the ability and the resources to fight it.
Like attorneys, real estate professionals, and just generally connected with people that this is kind of what they do for a living. Like even a CPA, right? A
Bingo.
good CPA would know how to help with this stuff.
I think it's a combination of multiple people. So generally speaking, and we're kind of getting slightly ahead of ourselves, but let's give away some of the secret sauce. You're going to have a real estate professional. You're going to have your CPA and possibly a tax specialist involved too. For example, because what happens is with land or upper end properties, these get just out of control sometimes. So we're doing a development project. We had purchased a large piece of real estate and we were going to go through and subdivide the property, and the tax assessed value the following year tripled. And so the taxes were going to be over $22,000 a year when the taxes should have been like $7,000. Well, what did we do? Well, because we're the professionals, we know how to play this game. We went and fought, went through the appeal process, demonstrated to them that they can't do that. They cannot tax you on future value. They cannot tax you on the upside potential until the upside potential is realized. So someone probably knew a subdivision had been started, so they just taxed it like the subdivision was done. We went through and fought it, took a little bit of time, energy, and money, and then we saved the difference between 6,000 and 22. See, that's how bad it is. It just kills me. That is an unbelievable amount of money. And I'm not the only one who's going to go fight something like that.
So what you're saying is just because your government or Uncle Sam says, hey, this is a tax you have to pay, if it's an incorrect assessment, literally, or
Yes.
you know that you know something they don't, or maybe they're lacking in the right information,
Yes.
you can fight it. And if that's the case, if there's people in the Washington State area or Seattle area, do you know of a real estate professional they could call, or how do they get in contact with that person?
We've done this for hundreds of our clients. So if you believe you can make it happen, you can absolutely reach out to us, rsg.com. And we're happy to have that discussion with you, because just because the bill's high doesn't mean you're going to win. We have to have demonstratable comparables. We have to put together what's called a broker price opinion, which is like a mini appraisal. We've even had clients, though, go to the level of getting a full appraisal, or they just purchased it and they had an appraisal. So sometimes it's just about walking them through the steps necessary in order to go fight it. What I want you to get out of this, though, is Washington, we have a regressive tax law where the inexpensive properties, generally speaking, are going to pay a disproportionate share. But the government knows that this 1% tax cap, that is law in Washington State, is a flaw in their tax collecting system, that it's capping the amount of revenue. So what they've been doing is they've been looking for ways to increase this all this year. And they proposed House Bill 2049, Senate Bill 5812, and both of these started to pass. I want to point this out. These made it through something. And this was the most significant ever effort of our legislature to remove the 1% cap. So I want our listeners to hear this, that they are doing everything humanly possible to increase your property taxes.
Is this a federal or state level?
This is state. This is Washington State.
Damn.
So one of the bills, 5812, proposed an optional change to local property tax, raising it from 1% to match population growth plus inflation, capping it at 3%. Ding, ding. Hey, I can basically triple your property taxes. Okay? That was one of the most aggressive parts to this. The governor, Bob Ferguson, he basically said, hey, I will veto this. But the problem with Ferguson, he also said that exact same thing on the largest tax increase in history, and then he signed the bill. So he's saying this isn't palatable the way you're doing it. Wink, wink. I need you to go trim it down a little bit. Wink, wink. So we can tax people more, and then I'll probably just turn around and sign it like I did the other one. Sorry, this one...
because it's going to cost a lot of money.
An unbelievable amount of money.
It's like making me want to just stay in my small house, which it's going to. People are going to determine. I'll just tell you my thing. So, I've been wanting to. I have 5 kids, right? I'm married, 7 people. Sometimes, we get other, family and friends stopping by. We entertain a lot of people. And so in our 2,200 square foot house, it's tight. So I've been wanting to build my next house. Why I haven't? One, it's going to cost a lot.
Unbelievable right now.
From just the interest rates of the loan that I would need to build the house, okay? Secondly, my house, I have a really good rate. I'm not going to say what my mortgage payment is, but it's really low.
Yeah.
Guess what's raised it?
Yeah.
Taxes.
Yeah.
That's the only thing. It's gone up hundreds of dollars just from taxes alone, not my mortgage, right? Yeah. Which is whatever percentage it was when I got it, like pretty low. And so the idea that now I'd have a higher mortgage, yeah, I'd have a bigger house, but I'd have a much bigger payment, like extremely. So if you're saying taxes are going to go up even higher, you combine high interest rates, which they are, probably never be down to the 3% range in a long time, if ever. And you're saying property taxes have to go up and this is just in Washington State alone. Yeah. Then it's like think about how many people are like me or going to become like me that like, you know what? I'm just going to stay put in my house. And that's just purely from a financial standpoint. I have my own personal reasons why I love my house and why I don't necessarily want to build it. But I'm saying how many people are going to start thinking, that's going to be my payment. Like imagine, I'm sure you've had this.
This is the affordability crisis.
Yeah, like you probably go through some kind of worksheet or at least have a conversation about what it's going to cost to buy a house, right? I know you're not a financial advisor, but it comes up. And then people are like, ugh, I don't know if I can afford this, right? Yeah. I mean, do you ever have conversations around the taxes?
So right now, your average consumer, whether it's a first-time buyer, a move-up, even people at some of the upper end, it's constant sticker shock because it's interest rates, it's property taxes, and it's also insurance. It's the trifecta. What I believe is going to happen, and I want to just kind of change or think about some of the language, is you said they have to increase taxes. I'm saying they want to. What I'm also saying is our listeners, our concerned citizens, call your freaking representatives and say, don't increase my freaking property taxes, you idiots. Spend less and let's vote different than what we're currently voting.
By the way, does calling actually work?
Call, email. So yes, it does. Let me explain. It's not if Benji calls or if Anton calls, but if all of a sudden your state senator is getting
inundated,
bingo, they're getting hundreds or thousands about a specific topic, are they going to listen? They're going to start to pay attention. But if only one person reaches out, they're going to ignore it. This is the public rising up and saying to Washington State, to our legislatures, that, hey, no more freaking taxes, spend less money, cut that shit off. Like, just stop, okay?
And then probably more powerful is who you vote for.
Yes. Duh.
And so, having the candidate that is going to be like, hey, we're going to cut taxes, but also cut spending is going to have to be part of the equation. But that's one of the problems. People want less. They want less taxes, but they still want the benefits. Or some people say you want your cake and eat it too. You can't have both. And so that's why it's going to get so bad. That's what I'm saying. I'm a good example of somebody that never thought about property taxes. I've been buying houses since 2004, okay? I never thought, oh my gosh, property taxes. Now I'm like, dang, property taxes could go up 6%, potentially making it so like really tips over that threshold to where I'm like, I'll just stay put, multiply that by thousands, if not 10,000 people.
Yes.
And then you've got a problem that now you're like, hey, I need to voice this. You see what I'm saying? And to me, I'm like, wow, and don't even get started about groceries, right? And the expenses around life. It just,
That's what we should all be saying to our representatives. I am feeling pinched because of inflation, taxes, the attack on small business, property taxes, the gold tax like we had talked about. Come on, that's freaking ridiculous. All of these things adding up is pinching us even more. Well, state, what we want you to do is we also want you to pinch yourself. Pinch your spending, pinch your budget, control it a little bit. That's what hasn't happened. We haven't controlled the budget and the spending, and we're finally there. All right, let's tell people how to solve the problem. So, one, I love real estate. We're going to keep buying real estate here in Washington State, but we got to push back against some of this stuff to protect long-term property values. So number one, you've got your senior citizen exemption. Also, you could be disabled or a veteran. So to qualify, you got to be 61 years or older, retired, disability, or a disabled veteran. But then you have to own the property, and there is an income threshold. So unfortunately, this income threshold is too low. And I'm voicing my opinion on this. We should never have a situation where a disabled individual, a veteran, or a senior citizen has to move because of property taxes. And the numbers I'm going to tell you next are too low based on how expensive it is to live here. So in King County, you cannot make more than $84,000 to qualify for a senior exemption. In Snohomish County, it's $75,000. In Pierce County, it's $64,000. Well, let's say you're two cute little old people. That's not that much money. And if you've got other expenses on top of that, that threshold isn't high enough. Love to see that one. But what that does is it locks it, whenever you get qualified for the exemption, it locks it in at that property value, and the taxes don't rise, and then you get a smaller amount of that property value. Awesome. This second one is called the Property Tax Deferral Program. Notice the word deferral. So we offer two main deferral programs, one for seniors or disabled on limited incomes. And what this does is this postpones property tax payments until the owner dies, sells, or the home is no longer the principal residence. Washington State will pay the taxes on their behalf. And these programs are designed to help homeowners on limited income, seniors with disabilities, remain in their homes without the immediate tax bill. The problem is this is a lien that accrues interest until it's sold. So use this one with caution. The residential home improvement exemption. I actually didn't know this existed. I learned about this one. This exemption provides a temporary tax break for certain substantial improvements, additions, remodeling to your single-family dwelling. The value added by these improvements may be tax exempt from property taxes for 3 years. The improvements have to materially increase the value, must be at least 30% of the home's value. So think about this. If you go and buy a home and you do a full remodel on the home, and it's more than 30%. So if you bought a home for $600,000 and you put $180,000 into it, you would stay at the $600,000 assessment, not the higher amount, for up to 3 years. And that's quite a bit of money you could save on taxes over a 3-year run.
What's an example of an addition that?
Well, it's additions or remodels. So
okay, but how do they tax you on remodels?
Well, what happens is they figure. So the assessor goes by.
Creeping on you?
They basically creeping on you. The assessor goes by, they shoot the picture, and they're like, the yard's not that good, the paint's not that good. They come by the next year. Paint's perfect, yard's perfect, brand new windows, brand new siding, brand new roof. The assessor goes, I can charge you more. Click, shoots the picture. That's exactly how that works. So as that happens to you, you need to look into this program to see if you can qualify for that exemption. And then the last one is filing a tax appeal. Okay, so at the end of the year, so the end of 2025, going right into 2026, so January 1st, that's when the new assessed value establishes itself for the year. Generally speaking, these notices are mailed out in June, and then you have 60 days from the mailing date of the notice to appeal the value. And I have appealed these in multiple counties. I've appealed them in Thurston, Skagit, Whatcom, Snohomish, King, Pierce, basically the I-5 corridor. Whenever we get these assessments, I sit down, I look through each one of them individually. Okay, so one, you can't use just a regular sales approach. You can't use just a regular it was tax assessed for this before, I don't like it. Here's how you do it. You sit down and you compare what's my assessment versus what's selling in the market. Because we do a lot of land, do a lot of investment properties, we end up seeing these things fluctuate very wildly. We'll buy something and all of a sudden the tax assessed value will double. Okay, but we haven't done anything to the property yet. So this is the reason we go through and fight them. We put them into a spreadsheet. We put where they are, where they were before, where they are today, the percentage change in difference, and then what we think the market value is. And then we decide, is it worth our time to go fight that? In the case of the one that was 22,000 versus 6, that was 100% worth our time. The next thing you have to do is you have to get something to demonstrate value. So you're going to need sales comps. You're going to need a broker price opinion or a BOE, which is also a broker opinion of value, and an appraisal, but you need something to justify that. You have to fill out their form correctly, and you've got to mail it back correctly. And it has to be done before the deadline. Then they respond. Sometimes they respond and say, okay. Sometimes you have to get on the phone with them. Sometimes they ask for more information. Just simply provide them the additional information. I will tell you, out of all the ones we've appealed, though, we only win maybe 20% of the time. So 1 in 5. So don't get your hopes up because it's higher. There has to be an actual reason that they are overcharging you for the assessed value. All right, everyone. That's a lot about property taxes. I mean, just a lot. We understand that Washington State, our property tax system, is fundamentally and structurally flawed. It disproportionately hits properties. That problem with commercial is definitely getting pushed onto the residential side. And this 1% cap guarantees this volatility, but realize the legislature are trying to raise it. So our entire tax system here in Washington State is just very complex by design, but we love talking about these topics, like how does economics work in Washington State? How does finance work? How do you create wealth? How do you do that by owning real estate, investing in real estate, and then protecting that? So don't let your money sit in the hands of the government. Share this with someone who needs to know what they can do or should do in relation to their property, and drop any questions that you have below about how to go fight to get your property taxes reduced. We'll see you guys in the next episode.